China has a huge interest in the price of gold, if you like, and she has a huge disinterest in the dollar. So really what she's trying to do is she's trying to run, with Russia and Shanghai Cooperation Organization and BRICS, all these parties, she's sort of, if you like, dividing a world into a sort of schism between East and West. And the one thing she wants, if you like, is control over the settlement means for all the commodities she buys, the things that she imports and the things that she exports. And so she wants to do away with the dollar. And part of this is having control over gold markets. And that is why, it's one very good reason why anyway, that now that she, is de facto controls the physical gold market, she now wants to take away, if you like, the paper control, which is very, very much a dollar story.
Alasdair Macleod, a former banker and senior economist at GoldMoney, has been tracking a financial pivot that has been hiding in plain sight: China's stealthy accumulation of gold and its quiet preparation for a post-dollar world. While the West obsesses over rate cuts, CPI prints, and Treasury auctions, China has been executing a 40-year plan grounded in Marxist monetary theory. According to Alasdair, the Chinese leadership has long anticipated the collapse of Western fiat systems, and they've responded by amassing gold at a staggering pace, not through official central bank channels, but via off-balance sheet state entities, military infrastructure, and tightly controlled import pipelines. By Macleod's estimates, China had already stockpiled over 20,000 tons of gold by 2002. Since then, over 27,000 tons have passed through the Shanghai Gold Exchange. Much of it has been retained within the country. This isn't just insurance. It's a slow-motion monetary coup. Beijing's strategy? Build a dual-structure financial system, one for domestic credibility and one for global trade. China wants to offer its regional partners a currency they can trust. Now combine that with soaring U.S. deficits, an unrepayable national debt, and a de-dollarizing BRICS bloc, and we've got a tectonic shift underway. China, Russia, and the Shanghai Cooperation Organization are building parallel settlement rails, commodity-backed, gold-referenced, and beyond Western control. This is a slow bleed for fiat and a bullhorn for hard assets. If Macleod's right, we're on the cusp of a significant revaluation, not just of gold, but of everything priced in dying paper money. Now we present the clips of Alasdair Macleod's latest video. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
I think, for a long time, China has had the view that the paper currencies of the West would eventually go to zero. This, if you like, stems from the Marxist universities who, in China, who basically condemned capitalism, reckoned that capitalism would destroy itself. And indeed, Marx himself saw capitalism as being, if you like, China started off with this, when Mao Zedong died. This thought, if you like, was behind the appointment of the People's Bank of China to act not only for all the foreign exchange transactions, along with the SAFE fund, which is sort of seen as a sovereign wealth fund, which is underneath the control of the People's Bank of China. But also in 1983, regulations were produced by the Communist Party appointing the People's Bank with sole control over the nation's gold and silver programs. And it was clear that with that big bear market that we had between 1980 and, this started in 1983, in effect, between then and the year 2000, 2002, there was a lot of gold coming out on the market. These were the conditions under which the People's Bank of China was able to accumulate substantial, undeclared quantities of gold bullion. By 2002, obviously the People's Bank of China and the Communist Party reckoned that they had got enough gold to secure their currency in the future. And so at that stage, they opened the Shanghai Gold Exchange and allowed ordinary Chinese citizens to accumulate gold. Until then, they'd been banned from owning it completely. Since then, Chinese nationals have taken delivery out of the vaults, the SGE's vaults, of around about 27,000 tons. Now, some of that would have probably gone back in as scrap, because anything which is resubmitted to the vaults, if you like, is scrapped and then recast. But on top of that, there is quite a lot of gold which is actually owned by banks and also ETFs and other investment funds, which are stored within the Shanghai Gold Exchange's vaulting system. So, we're looking at very substantial quantities of gold. And I reckon that by 2002, I reckon the state had probably accumulated around about 20,000 tons of gold. And also bear in mind that they invested a lot of time and effort into both refining gold and also mining gold. And they quite rapidly became the largest gold mining nation in the world. And have held that position for, 15 years now? 10, it must be about 15 years. So, and the other thing is, of course, we've seen gold go from the west to the east. I mean, this was, a story which is that's 20 years old, that story now. So there's an awful lot of gold has gone into China. And not only that, but nothing comes out of China. I've spoken with directors of the Swiss refiners, asked if they ever see any Chinese refined bars, and the answer basically is no. There was a report of a few bars turning up, and it was thought that those were smuggled out. But, basically it's Hotel California for gold. So there's an awful lot of gold, both owned by the state and also owned, and not declared as reserves, incidentally, owned by the state and also owned by Chinese nationals. So how much it comes to, I really don't know. But you can see that China has a huge interest in the price of gold, if you like, and she has a huge disinterest in the dollar. So really what she's trying to do is she's trying to run, with Russia and Shanghai Cooperation Organization and BRICS, all these parties, she's sort of, if you like, dividing a world into a sort of schism between East and West. And the one thing she wants, if you like, is control over the settlement means for all the commodities she buys, the things that she imports and the things that she exports. And so she wants to do away with the dollar. And part of this is having control over gold markets. And that is why, it's one very good reason why anyway, that now that she, is de facto controls the physical gold market, she now wants to take away, if you like, the paper control, which is very, very much a dollar story. So that's one aspect of it. The other aspect of it, if we go back to what the Marxist universities taught, the Chinese students about how the capitalism would destroy itself. Well, obviously, if it destroys itself, the currencies get destroyed, particularly if they're not attached to gold. In other words, if they're just fiat currencies, they will go down the Swanee River as well as capitalism. Now, we can see the conditions whereby this is now going to happen to the dollar. Now, I think as far as the Chinese are concerned, they've expected this. This doesn't surprise them at all. But the election of President Trump, as far as the Chinese are concerned, is accelerating the process of the death of the dollar, simply because he's a spendthrift. We've got that big, beautiful bill going through at the moment, which will probably add, take that budget deficit up to something like 2.5–3 trillion. You've got an economy which, really, when all is said and done, is not behaving very well. It's probably in recession, and it is particularly in recession if you take out government spending. In other words, it's only government spending unfunded government spending, which is actually giving the illusion of an economy which is growing. Take that out, and you've got a contracting economy. And it's been like that for a few years now.
Alasdair Macleod's analysis doesn't rest on theory. It's rooted in evidence, ratios, and power dynamics. He explains that, unlike the West, China doesn't use gold as a speculative asset. It uses it as a strategic reserve. While Western banks rehypothecate paper gold 100 times over, China demands physical delivery, builds vault capacity, and operates within a closed loop. Gold never leaves the system. And here's the kicker. If the dollar enters a confidence crisis, and many argue it already has, China could fix the yuan to gold overnight. That move would instantly anchor the currency in credibility, especially among energy and commodity exporters tired of dollar volatility. It's not a gold standard, it's a gold signal, a means to reprice trade settlements. This isn't 1971 in reverse. It's 1944 reloaded, with gold back at the monetary table. And with 60% of global reserves still in dollar-based debt, a revaluation event could be violent. Let's get back to the interview.
Now, I think that one of the points behind the internationalization, if you like, the mobilization of gold as part of a trading situation, if you like. I mean, trading not fixed at this stage to the yuan, but obviously trading alongside the yuan at some stage, when the dollar really does start collapsing, I think you will find the Chinese are in a position to immediately announce a fixed exchange rate between the yuan and gold in order to stop their own currency sliding along with the Western currencies led by the dollar. So I think this is all after President Trump's Liberation Day. I mean, bear in mind that the reaction from the Chinese was uncharacteristically quick. The first announcement that came out was that they were going to speed up the negotiations for a free trade agreement between China, Japan, and South Korea. And then this was rapidly followed by President Xi visiting some of the leading ASEAN nations, which are basically the other nations, if you like, in Asia, in Eastern Asia. I mean, I think I can't remember, he went to Myanmar, he went to Vietnam, he went to Malaysia rather, and I think he went to Thailand as well. So now this was quick. Now I'm fairly sure that the conversations that he was having was really about very quickly establishing a plan B, if you like, when America, started raising all these tariffs, this tit for tat tariff sort of thing. China needed to protect herself. She needed to secure her regional market, if you like, and that's what that was all about. And so this move on gold, I think, is in some senses an extension of that. And I'm sure that President Xi would have said to some of the leaders in these ASEAN nations, we're quite happy to sponsor a gold vault so that we can trade in yuan and we can trade in gold, whatever you like. I mean, this would be particularly one of the countries he went to was Vietnam. Now, the Vietnamese do use gold for ordinary settlement. I mean, you buy a house in Vietnam, you use gold. So, you can see the links, if you like. I may be joining the dots too much, but to my mind, it is actually quite clear that there is a new world out there which we are not involved with, and it is based on Chinese yuan that will become the principal currency replacing the dollar. And at some stage, it will be guaranteed by gold. And that, I think, is very, very important to understand. If you go to the Bank of International Settlements, of course, they're appointed really. I mean, people like Carstensen, are appointed by, in effect, the major central banks. So we're looking at the Fed, the Bank of England, the Banque de France, obviously the Swiss National Bank, and various others. And there's a sort of consensus, and the consensus comes out maybe not completely anti-gold. Because the BIS does actually understand that gold has a major role, if you like, in financial markets. They argue a bit about how it should be categorized, and this is the Basel subcommittee. But they seem to have sort of vaguely agreed on that now, and accepted that gold is an important asset, if you like. But the rest of the world, like the Russian central bank, the People's Bank of China, and so on, those banks, I mean, they're Johnny-come-latelys in this macroeconomic game, and they don't play it the same way. There is, if you like, a different world out there. There's a world out there that understands that metallic money is actually money without counterparty risk. And you can own a Maria Theresa dollar or, a gold sovereign or whatever it might be. And that, if you like, is yours. And there is no risk attached to it. And furthermore, nobody knows you've got it until you actually come and try and spend it somewhere. So there is this fundamental difference. Now, if you want, basically what these guys are doing, they're not buying gold so much. They're getting the hell out of fiat currencies because they understand what a fiat currency is. We've forgotten. This is the important thing.
Alasdair Macleod's warning is sharp. The next monetary regime won't be led by central banks. It'll be anchored by metal. China's extended play is becoming clear. A gold-rich, debt-averse power aligning with other commodity nations to unseat fiat dependence. And as gold moves from insurance to a base layer, the West's leverage game breaks down. This isn't about speculation. It's about survival. And for investors, it's about allocation. When currencies collapse, only one thing stands. Share your thoughts on Alasdair Macleod's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.